In this video, we used Cobra CT5B to talk about Rule 13. Rule 13 is different, it's tricky, it requires more capitalization. It's not for everyone. Doubling down on losers or starting, you can start when there's a loser, but doubling down is more advanced, requiring more capital. So it's not for everyone. In this example, we show you how it's done. On the left, you see Cobra CT5B. Here is the equity curve, here's the trading system. And on the right, we're doubling down after the first loss until there is a winner. And so it just keeps doubling down until there's a winner. And with that scenario, you can always make it back to equity peaks, but you get these sharp drawdowns. And so here's the performance summary. And you see its maximum contract held is 32. One more loser, that would be 64. Another loser after that, that'd be 128. So it becomes capital intensive very quickly to trade that way. And so, for example, let's take a look at the inputs for this. You'll format strategies and we take a look at the inputs. At ES.D, 3 minutes is what we're looking at, the chart we're looking at, while we're trading on a 1-minute chart. Start with one contract, use a limit entry, and you're simply selecting Rule 13. This first one, you see 4 inputs. Most of the others are either 1 or 0 to turn them on or off, but Rule 13 has 4 different inputs. And so in order to use this rule, the first one works like the other rules, 1 or 0, and then there's additional amendments to this rule. If you want to double down, you add to the Martingale, you turn the Martingale on by setting it to 1. Otherwise, it'll start after a certain number of losses. And then winners to stop. If you want to use that
Strategy
rule, you
alert.
add 1 to that. If you want to stop after an equity run-up, you add a 1 to that. But in this case, we're turning the rule on, we're doubling down after each loss, and then we stop. We also want to stop after a certain number of losers. And so then you have to go down to the inputs and set those. You have to set up the settings for this rule, and this rule. And right now this rule is 0, so that rule is not effective down here. So let's take a look at these. So consecutive losers to start, and that is 1. So for example, if you weren't using the Martingale rule, you might say start at 2 or 3 or 4 losers in a row, and then winners to stop is 1. If you didn't have winners to stop on, you might have the equity run up to stop on. So say you start with 3 losers, and then up here, this is winners to stop. You set that to 0 and this to 1. One of these should be set to 1. Winners to stop or equity run up should be set to 1. Well, this could be either 0 or 1. And so when you turn on consecutive losers, you're going to start trading after a certain number of losses. This tells you if it's 1 that you double down after each loss. If it's 0, you're not doubling down. And then this tells you how many winners to stop. And then the equity run up, you could choose that as well or instead of, and say, okay, after a $1,000 run up or a $2,000 or a $3,000 run up, then I'm stopping. So so in this example, continue with this example, losses to start. Since we're using Martingale, we just select 1. Winners to stop is 1 since we're doubling down on each trade, and this one's not in effect because it's not on. And so the other inputs match the original strategy, Cobra CT5B. You see the inputs there. We've gone over this before, this strategy. These are just basic rules, 9:30 to 15:30 on the entries, 16:12 on the exit. This is based on Eastern Standard Time, $500 stop loss per contract, and we sync the exit with the master since the original strategy uses a surge exit algorithm to exit strategy. So let's take a look now again at the results, and you can see really nice straight line equity curve, and then you see these sharp moves down. You start to double down, so you get those spikes down. And so both these performance reports don't include slippage or commission, and this is just an example. And so that is Rule 13 using the Martingale approach, where you double down after each loser, starting with the loser, and then you stop after you have one winner after that series of losers, so you're always able to make it back. Again, very capital intensive when you add the Martingale rule.